On this episode of Fintech Finance, we're taking a look into the world of point of sale and payment services and how this all affects the experience for the consumer. For this, we speak with AEVI, 11FS and Worldpay to find out more. Firstly, I went to speak with Mike Camerling to speak about some of the challenges that the industry is facing when it comes to POS.
For us at AEVI, we work with merchant acquirers and merchant banks a lot. And as most people know, the whole financial industry, there's lots of new innovative ideas and technologies coming up. And it's mainly these parties that are often, challenged whether they are going to work together, cooperation, whether they have to defend against such technologies and ideas, or do something themselves. And at the moment, what we see is that the classic parties in terms of acquiring don't have the ability yet to differentiate themselves enough, apart from price or hardware. They need to go into a new direction for value-added services to create new propositions, but the technology and the thinking is just not there yet. One of the things that needed to happen first, as you know, is that we need a sort of new range of terminals, and terminal is almost the old word for it. It's more a business tool. If we want to provide services and apps beyond payments that assist merchants in their business processes, so the merchant acquirers get more stickiness, you need a device that can do that and a whole ecosystem that can provide these services. The way people interact with their devices, what we have in terms of choice, they expect merchants and therefore the merchant acquirers to go along with the new generation and the new concepts of payments. They expect to walk into a store, not to go back for tens of years, but actually to be in the present, deal with apps the same way they do at home.
So I've come to level 39 to speak to Jason Bates from 11FS to talk a little bit around point of sale.
I guess if we go back to that digitized versus digital, and you start by saying, how do we make payment real time? Because in the end, when your mum and dad, my mum and dad were paid their pay packet, and they kept their cash in a wallet somewhere, or maybe we're going back to grandparents. They had a felt sense of where they were. You would take a 10 or 20 pound note out, you would pay for someone, and there'd be 10 or 20 pounds less in your wallet. So we've moved away from that. We've really moved to a world of plastic. And whether there's £1 million on your piece of plastic or you've got massive debts, it kind of looks the same. So without that sort of real-time notification, without being kept up to date with where you are, it's very difficult to manage your finances. Now, the interesting thing is, I talk to colleagues in the payment sphere, and they've had the ability to do this kind of thing for a very, very long time. The card processor who handles whether the money can come out of your account or not is asked by the merchant when you put your card in, does Jason have enough money in order to afford this? And they send data to the card processor and to the issuing bank to work out, so that they can work out, is this a fraud, who does it apply to, and all this kind of thing. So, easily for the last 10 years, we could have had this real-time notification of spending, because it comes with this authorization message. But the idea that the paradigm, the belief the banks had, was that actually customers would sooner know exactly how much is legally in their account. So how much has been settled rather than authorised. I'm getting a little bit technical, but it's a little bit bizarre that in the end you might see transactions that have cleared, that have settled a few days later on your statement, but really the money's gone, the money's been authorised. So to think about this from a customer point of view, then you start with this idea of what do customers really want to know? And they want to know, how much have I got to spend? If I go keep shopping through the day, I need to know where I am. And that applies to whether it's a shopping trip, a holiday, month to month. So in that refrain of going digitized to digital, with Monzo we started from the idea of what do customers want, what's the technology that's already there, and then how do we take smartphones and data centers and kind of next generation infrastructure in order to provide that service to the end customer. So that's still the case in terms of if you use a piece of plastic that has MasterCard or Visa on it, because the infrastructure that was put in place there originally meant that a merchant could get authorization for a payment. And we've all seen on the little point of sale terminal authorization code 50134 or something. But then all of the settlement and the moving around it behind the scenes is aggregated up. So it's not your one payment that moves around the system, but all of the payments that a particular merchant should receive, and all of the card payments that a particular issuing bank should send across the card network. So if you like, there's been this batch processing, which is very much a traditional way of banking that's behind the scenes that's actually led to this authorization versus settlement gap. But that's going to change. The PSD2 and the CMA remedies that are coming along that will enable faster payments through third-party services are really going to start to bring much faster payments that customers will see move very quickly.
Fintech Finance reporter Douglas McKenzie went to speak with Nick Telford-Reid from Worldpay to talk a little bit about how the payments industry is really adapting and changing.
Hi, I'm Doug McKenzie from Fintech Finance. We're here in London talking with Worldpay.
Back in 2001, e-commerce was really only confined to a couple of countries, and now we see it pretty much ubiquitously across the globe. Back in 2001, there were no mobile payments. This year, in some parts of the world, we'll see that be more than 50% of all payments in the remote channel. And then, just if you look at the physical cards world, in the last 15 years, we've seen chip and pin, we've seen contactless, and we've also seen the rise of all sorts of different alternative payment methods, whether it's Boleto in Brazil or it's AEVI in Germany. Right now, we support more than 300 different alternative payment methods, and there are hundreds more. Most of our customers, their core business is not payments. They're selling services or they're selling goods. That's what they know, that's what they understand. That's what they want to be good at. So they come to us to help reduce the complexity of the payments landscape. So we spend a lot of time watching the market, listening to customers, understanding what countries they're going into, what geographies they want to enter, what payment methods their own customers are going to want to be able to pay them. And that's what drives our business. So we're listening to customers, we're watching what's going on in the industry. And we spend a lot of time talking to the regulators, watching industry forums, also helping to develop international standards. That's one of the ways that we really kind of stay in touch with what's going on.
Ali went to find out why AEVI believe in a new generation of Android-based smart POS devices, such as their Albert terminal, and what this means for the customer experience.
And Albert actually means a lot for different people and to different customers. So it ranges from, for example, a telco company being able to optimize the process. And after a customer has chosen a mobile phone and has done the sexy thing, having to fill out a whole range of paperwork and making copies of a driver's license. Where with an Albert, you could automate that on the screen. You can make a picture of the driver's license. It automates the process and it's a seamless experience. But on the other hand, the advantages or what it means to a customer are far simpler, which is we see people just asking for the device with the big buttons. There is a whole range of experiences to be had. So when we started with Albert, and you might know that Albert was developed in a partnership between the Commonwealth Bank of Australia and at that time still Winkor Nixdorf, now AEVI. We at the time started with how can we provide the same in-store experience as we have at home. So we're all at home sitting on our phones, downloading apps from Google, from Apple, on our tablets or the phones, like I said. But when we go to a store, we go back to the Middle Ages. There's a grey big box that is a POS, and actually none of that experience transfers. On the other hand, the bank had similar ideas, but what they wanted to do is say, okay, how can we help the merchant doing that? But at the same time for us, providing more services on top of what we do now, and therefore embedding us stronger and create more stickiness with our customers.
As a product person, as a designer, as someone who kind of looks at the end goal being the customer journey, that's where you have to start with. And in the end, you turn around to a customer and say, well, how would you like it? And there are a variety of answers to that, because it really depends on the context of where you're making the payment. A great example is probably Uber, because there isn't a point of sale. You get into the taxi, it takes you where you want to go, you get out, and you get something that says, well, this is how much it is that you can complain about if there's a problem. Amazon had just launched a new retail store in the States, a kind of proof of concept, where again, you pick up your shopping, you leave the store, it tells you how much it is. So there's definitely a push to it becoming invisible, to small payments, to payments where getting your card out and the likelihood of something being a real, you being defrauded for thousands of pounds is small, but actually it's the hassle that you're getting rid of standing at a queue. And if you think about it, you can go back to, I don't know, W.H. Smith's with honesty boxes for newspapers. There's something about that invisibility or minimising the point of sale experience, because people don't want that. They want to grab their thing and they want to go. And you've got other types of point of sale. You've got buying a car, or you've got large transactions. I think what's interesting there is where a variety of financial services comes together. You might have to work out, can I afford this thing? Can I borrow the money to buy it? What's the best deal there? How might the installments work and the financial deal around it? And then the transaction itself. So there, it's not so much minimising and making it invisible, although it'd be quite funny to be able to drive out in a new car, but about bringing all of the financial services into an end-to-end customer journey that makes that a lot smoother and a lot easier. Santander did an interesting prototype where you could take your phone, take a photograph of a car number plate. It would do a DVLA search to see if it was stolen or how that, whether there was anything wrong with it. It would look up the list price, the kind of book price, and then it would work out, could you afford it and how might the payments work? So again, it's APIs connecting together an end-to-end customer journey that might take an individual quite a long time in order to piece together. But because we can bring this together into what are you trying to achieve, let us do it for you, it becomes something very different. And I guess the extra bit we haven't spoken about is online point of sale. That again, we're looking to bring together everything we need in order to make that happen. Obviously, Apple, Facebook, because there are a lot of large players who are looking to get into this, are obviously kind of pushing that along as well.
Worldpay has always been more than just the basic payment process. From the beginning, we've tried to have a broader value proposition for our customers. So, for example, we have a series of products around reducing fraud, which is an essential part of the proposition that we offer. But over the last couple of years in particular, we've really doubled down in our investment in our technology platforms. And one of the ways that our customers are experiencing that is in the breadth of our data offering. So you can imagine that we are sitting on a huge torrent of payment data. And so we have invested very heavily in an enterprise data platform that can really begin to deliver insights for our customers on how their businesses are performing against their peers, or how their businesses or how their sectors are performing against other sectors, and how different geographies compare. And I think that kind of comparative analysis is going to increasingly be a valuable part of the service that Worldpay offers its customers. We made an acquisition of a business called Payzian out in the United States, whose core proposition is understanding acceptance rates, for example. So, if you're a merchant and you're taking payments, of course you want to accept as many payments as you can that aren't fraudulent. So what Payzian's proposition is all about is understanding how different issuers, for example, are authorizing and accepting payments, so that then our customers can really understand how best to get their maximized acceptance. And that kind of story of examining the data, of really being able to derive intelligence and insight is a kind of core part of the value proposition. And we can bring that all the way down from the big corporates that we represent, the big multi-link grocers that you and I would do our supermarket shopping in, all the way down to the very smallest businesses. We've now launched a product called My Business Dashboard, which brings some of that insight into a corner shop or a small retailer or even a hairdresser. Security has always been a factor in payments, and for Worldpay and for the technology organisation in particular, it's our number one priority. So number one is defend the citadel, and then number two is keep everything up and running. And number 3 is then all the other great stuff that we're doing. So security is right at the heart of what we do. We've made a massive investment in a new technology platform as part of our separation from RBS, and the security of that offering has been central to the design. And it's not just kind of guarding the perimeter, it's also in all the other stuff that you need to wrap around it. So making sure that we understand who our people are and what access they've got, and all the intrusion detection, so you understand the whole picture around security. So one of the trends that we've seen in payments over the years is who controls the payment data, and that has moved backwards and forwards over time. So right now, I'd say we're in a kind of a period where different merchants have taken different stances. There's this industry-wide scheme called PCI, Payment Cards Industry Data Security Standards. Worldpay are actually a member of the council that sets that standard. And that's really driven smaller retailers to examine whether they want to hold payments data themselves or whether they want to have a service provider like Worldpay look after it for them. Now, if you're a bigger customer where you've already got significant enterprise security in play, that's a more nuanced question. Do you want to look after your payments data yourself, or do you want to have a service provider look after it? But as we move towards things like tokenization in the cards industry, I think the balance of that might move again.
Ali also wanted to find out what Jason's opinions are on how open APIs will affect the payments industry.
After the transition from digitized to digital, the transition to marketplace banking to open APIs is huge. I actually think people are underestimating the effect that will have. Because in the end, from a customer's perspective, you're going to be able to allow third-party services and individuals access to your data and access to transact on your behalf. So in some ways, especially with this real-time intelligent sort of contextual banking, you're going to be able to have a private banker 24/7 looking after your finances. Only it won't be a person, it'll be a group of systems somewhere that are learning about you, that are monitoring, that are looking for better deals, whether there's fraud happening, how you want to live your life, and the things you're saving for in the future. And these services will help you do that. So on one hand, there's a utopia. There's Jarvis from Iron Man, saying, "Excuse me, sir, I think your electricity bill looks a little high this month. Shall I look into switching for you?" "Yes, please. Why don't you?" On the other hand, there's horror. There's Blade Runner. There's the potential for massive fraud, for cyber security threats, for someone to get access to your account and slowly, transaction by transaction, empty it, or to get access to your data and steal your identity. And not just you, but the other million people using those services. So there are big questions on how does this work? How does liability happen? How do we make sure you're not confused by 50 services that you've signed up to? How do we make sure that people don't steal your money and your data? So on one hand, it's worth it. There's going to be some amazing riches and people are going to get much better services at the end of the line. On the other hand, there are big risks and dangers that at the moment the industry is getting together in order to work out how that should happen.
I think the biggest change we see and has started some time ago is the acceptance of our customers, the merchant acquirers, merchant banks, that something needs to change, that the new way of propositions to their customer base is in the value-added services and the value-added apps. So the acceptance is there, but I think the big change is the way we think about this and how we're going to do it. So for me, the next year and a half is definitely one of training and education, learning a lot about, okay, so how do we get our heads around that instead of only offering, which is a lot on its own, payment services, to now start offering rich apps. How do I enable my sales force to sell that to the merchants, and how do I end-to-end embed that in my organization? So consumers are more and more demanding. We've seen that over many, many years, but with the choice they have at the moment, the choice not only in payments capable hardware like our phones, but also wallets or any other apps they choose to use, Of course, the merchants are under pressure to start accepting these things, and the merchant acquirers will have to be even faster in adopting these technologies and changing their way of operations to support this.
On the next episode of Fintech Finance, we take a look at how to organise data and to look at fee and expense management with SmartStream, and we also head over to New York to catch up with Brown Brothers Harriman.